Yeah, everyone wants instant gratification, a trade that starts moving right after you pull the trigger. Alt season, which we have been in for some time, is the time of year where instant gratification becomes the norm. But those who instantly think gains will arrive will be the ones who get wrecked the most when the fun ends. But there is a way in these markets to identify what is going to be big before it's big. And that's by watching this channel. Because it's time for Chico Crypto. Stablecoins, they are the hot topic as of right now. Yesterday, I covered a multi-collateral stablecoin competitor to Makerdao's multi-collateral DAI. That was the unit protocol. And if they become a part of the Urine ecosystem, big things for USDP. But the major criticism of multi-collateral stablecoins, including USDP and multi-collateral DAI, is the fact that permission stablecoins are a part of that collateral. It takes away from the decentralization of the coins. Some say the single collateral DAI was better than MCD because only the fully decentralized Ether could be used as collateral. Unit protocol is better as they had more collateral options out the gate, but still those stablecoins permissioned reduce the decentralization of it. Where has the decentralization gone? Well, it's coming back in the form of not DAI, but RAI. RAI from Reflexer Labs. And RAI just went into stealth live on the mainnet yesterday. As we can see from the blog post headline, it says, crypto native stability backed by ETH and available for all. Yeah, RAI only uses ETH as collateral. That is it. And that is how it will stay. So what is RAI? Besides a Ether collateral stablecoin. From the team's description, after almost a year of testing, simulations, and building, we're thrilled to announce the launch of RAI. RAI is an ETH-backed, non-pegged stable asset whose monetary policy is managed by an on-chain autonomous controller. It's fully ETH-backed, but it's a non-pegged stable asset. What does that mean? Non-pegged stable. Well, DAI is a pegged stable asset. It is pegged to 1 USD. DAI is always fighting to hold that peg. 1 buckaroo. RAI does not hold its peg to $1. What? So what does it hold its peg to? Well, RAI is a free floating stablecoin, so that is to be seen. But the initial launch, it was $3.13. Although they did run a testnet for a year, then a mainnet demo with Proto RAI, aka pre-RAI. The mainnet demo lasted for 3 months. It ended on January 25th. During these 3 months, Proto RAI showed how a stable asset can lack a peg and instead have its redemption price float in response to market forces. PRAI's redemption price started at about $2.01 and then floated between $1.937 and $2.06. Not a bad variation of stability, especially when there were no professional market makers, almost no liquidity, and a lack of arbitrageurs to make PRAI significantly more stable. Also, during the demo, ETH went from about 400 to 1400, a 350% increase, while the redemption price fluctuated less than 4%. So now that RAI has dropped that P and is live on the Ethereum mainnet, these market forces, professional market makers, arbitrageurs, and lots of more liquidity could make it even more stable with less than a 4% variation. But that is to be seen. As of this video, it's only been 24 hours on the mainnet. So I'm sure many are looking for the token symbol RAI, but realize that RAI is just the stable asset of this protocol. You would get into RAI like you would get into DAI if you want stability. But people actually need to realize this. RAI is this protocol's DAI. Reflex forked Makerdao to create this, which means this protocol has a governance token, like Makerdao has Maker. So what is the governance token? Well, in their mainnet blog post, they speak of liquidity incentives and say this. In the next couple of weeks, we will announce our liquidity mining program for the RAI ETH Uniswap v2 pool. At that point, we will also reveal the Reflexer Ungovernance Token FLX. They continue. In the meantime, we're not saying that there will be retroactive mining rewards for the initial cohort of RAI ETH LPs, but we're also not saying there won't be. And then they say, before the liquidity mining announcement, you can test our Kovan liquidity mining dashboard. So they have that liquidity mining dashboard on the Kovan testnet ready to go a couple of weeks for mainnet, aka the launch of FLX. But the big point is this: we're not saying that there will be retroactive mining rewards for the initial cohort of RAI ETH LPs, but we're also not saying there won't be. So that means FLX could be airdropped to those initial people providing liquidity to the RAI liquidity pool on Uniswap. It could. So how does one go about doing that if they could? Well, first you need to get RAI to add to the LP on Uni. Two ways of obtaining RAI right now. You can trade on Uniswap for it. Just make sure you're on the right RAI and it is the confirmed trading pool. Or just like Makerdao, you can create RAI, creating a safe, aka a RAI leverage position similar to Makerdao's CDPs. You put in the amount of ETH you would like to put down as collateral. For example, 3 ETH, which gives a max borrow limit of just over 1,195 RAI. If we borrow only 500 RAI, we get our RAI redemption price, our collateral ratio, and our Ether liquidation price. Our safe would be liquidated at an Ether price of $759. But if we push up to our max borrow for RAI, that collateral ratio drops significantly, and our liquidation price rises significantly. If Ether drops to only about $1,814, this safe would be liquidated. Way less wiggle room than the first choice, but with the first choice, you get way less RAI. RAI is now obtained. How is it added to the liquidity on Uniswap? Well, back to the official RAI Uniswap information page. They have an add liquidity section. Remember, with Uniswap LP pools, you need to add an equal value amount of each token, RAI and Ether. You need to add the two assets to the pool. And that is how you could be airdropped their Ungovernance Token FLX. I'm not saying anybody should do any of this without understanding the risks of everything. RAI and Reflex is a brand new protocol. It has major risks as a new DeFi concept. RAI safes are leveraged positions. Understanding those and CDPs is critical if obtaining RAI through that way. And finally, it's possible they don't even do the airdrop. They didn't say they were, but they didn't say they weren't. But the past of airdrops from the big DeFi names, which Reflexer is, shows us joining in on the action early could be very profitable. Uniswap, the big old airdrop that started the trend. It initially surged, dumped, but has fired up and kept on surging to big levels. Similar story with 1inch. They dropped, initial surge and dump, but it has moved and gone to higher levels. All of this happening with 1inch on a shorter time scale. And now the more recent one, Torn from Tornado Cash, which the tokens recently got unlocked for trading. Initial surge, a dump, but it's already finding its footing on a much shorter time scale than even 1inch. I have a feeling FLX will follow a similar fate, and the hype may be stronger for this one. Why? Well, another token who did a testnet airdrop reward, as we can see from their public sale announcement, the graft in token distribution. 9% of the community allocation went to testnet indexer rewards. I remember, I covered it. Well, the graph has followed a similar fate as well. Looking at its price, after its initial launch, it had that pump and then settled down. But since it has surged. And guess who the graph was specifically tweeting about here recently when they were in stealth proto mode? Well, December 2nd, with a tweet that only got 47 likes, the graph said, the first on-chain PID controller is live. Check out the Reflexer Finance mainnet demo for Proto RAI and manage PRAI positions with this epic dashboard. So that's bullish. The dominant force that is the graph is tweeting about them and their PID controller, but it makes sense, as if you go back to the Reflexer app and you click your address, it defaults to a blockchain connection through the graph subgraph. But you can change to an RPC endpoint if you would like. And then, we here at Chico notice things in this industry like others don't. Someone decided to tweet about RAI at the end of the pre-mainnet. Charlie Noise, he said, the future of finance, with a slick meme. But who's Mr. Noise? He's only the investment partner and a dedicated researcher for Paradigm Capital, one of the largest crypto VC funds in the space, ran by the co-founder of Coinbase, Fred Ursum, to this day executive board member. So RAI, it's coming, but you guys please don't think Chico doesn't have a token that is trading for you today. For those who have stuck around, we have something sweet. Pooltogether, the no-loss crypto lottery, airdropped their governance token yesterday. And of course, many Chico members should have received this drop, as I covered it in July of 2019 for the very first time. And here's what I said then. Basically like a risk-free lottery driven by smart contracts and utilizing compound supply interest as the prize. I bought 4 tickets and have a 0.37 chance of winning, an estimated 142 DAI prize for locking up 80 DAI, which I will get back. This is the kind of stuff that is going to revolutionize every aspect of our lives, and the new pooled DAI contract could have many implications. So check those wallets and hodl this one because of who they are connected to. They were one of 2 projects a certain company's USDC bootstrap fund invested into back in April of last year. The investor was Coinbase. The 2 crypto companies, one is a nearly $1 billion market cap Uniswap, and the other is the under $15 million market cap Pooltogether. You get my drift? Coinbase is coming. Cheers, I'll see you next time.